Guys and girls, it's Nathan here. Just wanted to reach out and talk about what the banks are actually doing out there. So you may have realised or seen in the news just recently this morning as you wake up or last night that Westpac has raised its rates independently of the RBA. I've been talking about this for quite a while now, that the interest rates will be going up, which they obviously have. It's going to be a quick video today, talking a little bit about and touching on the subject. So last year, I talked about interest rates going up twice this year by 25 basis points each round, but I think that would be around where the top of it would be. It could go up another 2/4 basis point rises, and then basically the market would tap out at that point. Why are the banks increasing interest rates independent of the RBA? I had actually forecasted for the RBA to raise the rates, but their hands are actually tied. They can't do anything by raising the rates, because if they raise the rates, basically the economy will not be able to hold it up. Most companies out there using debt, so if interest rates rise, it wouldn't just affect the property market, it would affect all of the markets out there. What I didn't look at back at the time was the fact that going back in 2009, 2008, 2009, when the GFC came, what had happened is a lot of the banks had actually bought their funds from overseas, from the US Fed, and when they bought their funds from the US Fed, they had them on 10-year Treasury bonds, and obviously the 10-year bonds are rolling over now and the rates are going up. So the cost of money is going up around the world. However, in Australia, it hasn't. This will cause two things. One, it will mean that the Aussie dollar will suffer because of it, as all the other countries around the world are raising their rates. But what this means for Australians is that we're going to also be facing some rate rises independent of the RBA. Do I think they're going to go up very high? Not personally. Am I concerned about it? Not personally. However, we have seen, if anyone's holding a mortgage as of the start of 2018, they would have noticed that they've already received a rate rise, and we're starting to see another round. And I think the Westpac 14 basis point rate rise, so 0.14% rate rise that occurred yesterday, will be the start of the next round, and I actually called it to be before August. So I've been spot on with my research and my numbers that have forecast and prognosticated, so just something to be aware of. Where is the market going into the future? That's something that I always talk about. If you do want to get involved on my weekly, fortnightly talks about what's happening with that, we do have a mentoring program where I help investors navigate through this sort of changing market, as well as heaps of other cool stuff. From an aspect of what do we expect to see in the future, what sort of changes are we expecting to see, do remember that a lot of the debt that was purchased by the Australian banks came from the US Fed in 2008, 2009, and I think that in the start of 2019, it's going to be a lot of those bonds rolling over. So there may be a little bit more volatility, but personally, I've been forecasting this and talking about this since September 2016, what could potentially be the GFD. What am I forecasting this on? If you go and do a bit of research into a thing called a 10-year bond rate, and it's a 10-year bond yield, which is a US bond yield, they are currently sitting at about 2.88%. The 3-month yield is sitting at about 2.12, 2.13. There's a thing that's happening at the moment where it's called an inverted yield curve. Every time there's an inverted yield curve, it signals prior to recession. I have been talking about interest rates and been bang on with my interest rate predictions for the last 12, 13 years. So it's something to, there's credibility on my side, I guess, for you guys to, look at the same sort of research that I look at to be able to forecast what's happening out there in the interest rate market, in the lending market, and in the property market. So is this doom and gloom? I don't believe so. I just believe it's a natural part of the cycle. Rates are going up all around the world. So naturally, the funds that we've borrowed from overseas need to go up so the banks can keep their profit. Not that they need any more profit, because they're making enough out of it as it is. But do I see it shooting off really high? No. I see that there will be a stage, which is this phase that we're going through at the moment, where interest rates are itching up a little bit higher. But in the medium to long term, I actually see rates coming down a hell of a lot cheaper once that yield curve sort of inverts. And I think the yield curve is probably a few months off inverting. Once it inverts, I believe that we're going to see a whole pile more stimulus enter into the global markets. And obviously, after the stimulus goes into the markets, we're going to see a whole new round of excitement and booms out there in certain different aspects of the world. So, is it something to freak out about? No. Is it something to be excited about? I'm excited because I'm seeing the opportunities that will come in the wake of what we're seeing at the moment. So if you do need any help, you can call the office at Zinger Finance, you can call the office at Be Invested, and my team are highly trained and experts in this field to be able to help you take advantage of the opportunities that are out there and protect yourself along the way as well. So we'll catch up soon. Have an awesome day. And yeah, as I said, Westpac's increased their rates by 0.14%. Other banks will be following suit, I believe. I think it might be a matter of days or weeks. I don't think we'll pass a fortnight without seeing the other banks increase their rates as well. And from that, I think that this is the second one that I was talking about. I saw that there was two that was going to come before August. This is the second one before August. There may be another two of them independent, but it just depends on how soon there starts to be tremors out there around the world. If we see tremors around the world, we will see interest rates on the decline. We'll catch up soon. Have an awesome day. Bye for now, guys.